Welcome to Nerdbull1669 Weekly Trading Outlook. Tips for this week, 16th to 20th of February 2026. 16th of February will be a holiday for the US market. It's a Washington day. So the trading week for last week, February 9 to 13, 2026, right, was defined by a shift from the AI euphoria to AI anxiety. So resulting in a very volatile period, right, where the S&P 500 and Nasdaq struggle to maintain the record high, while the Dow Jones, right, actually crosses the 50,000 mark for the first time. Tech-heavy indices saw a week of sell-off as investors begin dumping companies in the AI crosshairs, selling firms perceived as being disrupted by the new AI tools. So for the market summary of last week, 9 to 13 of February 2026, the week started with a massive rally, with the S&P 500 gaining 2% on Monday alone. However, the momentum actually faded as the news of the disruptive AI product launches trigger a sell first, ask question later mentality in the software and the wealth management sector. So for the S&P 500, it actually finished a week down by 1.3% at approximately 6,932. So Nasdaq Composite actually retreated from a recent highs to end at 22,546, a weekly loss of roughly 2.1%. So economic drivers, so stronger than expected January jobs report, 130,000 jobs added, and a cooler CPI inflation, which came in at 2.4%, provided a cushion, suggesting a soft landing remains the base case despite sector-specific tech volatility. So how about coming to this week weekly outlook for the 16th to 20th February 2026? The upcoming week, right, will be a show me period for the market. Investor will be more focused on whether the corporate earnings, right, can justify the high valuation, and if the Fed minutes, which is happening on the February 18, would actually signal a definite, definitive pivot. Appreciate if you can like and share this video if you find this video useful and helpful for you. Thank you for your support, and we look forward to you supporting the channel for more content. So heading into the trading week of February 16 to 20th of 2026, right? The macro environment, right, is actually characterized by a cautious stall. So while the structural bull market remains intact, right, the immediate appetite for risk, right, has actually dampened as investors grapple with the high valuations and also a shifting Fed Reserve leadership. So for the macro snapshot for the week of 16 to 20th February 2026, right? As for the risk appetite, we are looking at a retreating to the neutral cautious. So after a hot start to 2026, right, institutional risk appetite has significantly cooled. So the AI hangover sentiment towards the mega cap tech has soured slightly as investors move from broad excitement to the show me the money phase regarding the AI infrastructure spending. So for sector rotation, so there is a visible rotation out of the growth and into the value and real economy sector. For example, energy, materials, and industrials. So for the current state, so the state street risk appetite index actually dropped to 0%, which is neutral. from the January highs, reflecting a wait-and-see approach ahead of the heavy earnings as well as the inflation data scheduled for the late February. So as for the rate direction, okay, we're looking at a stimulatus hold. So the trajectory for the interest rate, right, has actually shifted from a cycle of aggressive cuts to a high for longer stabilization. So as for the Fed pause, right, following the January FOMC meeting, the federal fund rate, right, is actually now sitting at 3.5% to 3.75%. As for the outlook, market consensus for a March cut has evaporated. So currently it's only estimated around 10% probability. So expectations are now centered on a prolonged hold, with the next potential move not priced in until May or June. As for the yield curve, so most likely we will watch the US 10-year yield. It has been drifting higher as the market price in more hawkish Fed stand under the potential leadership of Kevin Walsh, which is expected to prioritize balance over reduction. Or which will prioritize a balance sheet reduction, which is a QT. So on the volatility regime, we are looking at transitioning to elevated. So we have actually exceeded the low volatility regime of the late 2025 and enter a more turbulent phase. The VIX level, so the fear gauge, right, actually which closes on Friday 13th of February at around 8 at around 20.60. This is a critical psychological level sitting above the historical media of 18, but below the panic zone of 25. So for on the regime shift, I think the VIX, right, is currently in a rising trend. For the first time in months, right, we're actually seeing a gap up in the volatility at the start of week, suggesting that traders are paying more for a downside protection puts than they were in January. So seasonality, so February is actually historically a mediocre month for equity and a strong month for volatility spike, averaging an average increase of 5.5% in the VIX. So coming to the weekly outlook for S&P 500. So for the S&P 500, for the trend continuation, right, S&P 500 remain in a long-term uptrend, but the weekly close below the 10-week moving average suggests a phase of digestion. So to continue the long-term upward trend, so the bulls, right, must reclaim the 7,000 psychological level. As for the pullback risk, right, a breach of the 6,800 support zone, right, could accelerate a pullback towards the 6,650 to 6,600 area, based on the 100-day moving average. Now coming to the Nasdaq weekly outlook. So we are looking at a strength above 23,800. So a sustained move above the 23,800 would signal that the AI sell-off, right, was a temporary deep buying opportunity and opened the path towards a move above 24,000 point. So for any failure below 22,400, so if dip below this level 22,400, right, it will invalidates the recent bull flag and suggests a deeper correction towards the 21,500 support cluster. Now coming to the weekly levels for Palo Alto Networks PANW. We expect it's actually expected earnings on the 17th of February. Bullish. We are looking at bullish if the platformization strategy offset the accelerating NGS ARR growth. So for the bullish buyers, right, we're actually looking above the $230, and for the invalidation, right, we're actually looking at if actually it fall below the 2010 $210. Now coming to the weekly level for Walmart WMT, okay, actually I have earnings expected on the 19th of February. So Walmart need to hold the $130 dollars area to maintain its tech retailer premium valuation. So for the bullish buyers, right, we're actually looking at the above $135. So for invalidation, right, we're actually looking at if it's fall below the $122.8 level. So coming to the weekly levels for Google, GOOGL. So Google is actually currently in a green phase. So strength above the $345 will target towards a $360 level. So below $330 will shift the buyers right to a neutral and bearish. So for the bullish buyers, right, we're actually looking at above $345. And for the invalidation level, right, we're actually looking at below $330. So coming to the weekly levels for NVIDIA, NVDA. So NVIDIA is actually bullish if it can clear the 180 to 192 resistance level. So 170 is actually the line in the sand for a long-term structure. So for the bullish buyers, right, we're actually looking at above $192. For the invalidation, right, if it actually fall below $170, then we might be looking at a bearish outlook. So for the lead trail for this week ahead, right? We are looking at Palo Alto PANW, which actually reports on the February 17. So the market is actually looking for a 14 to 15% revenue growth. So the key will be their AI security integration. So any miss here, right? We could see the stock, right? Trying to test the $200 level. Okay, so the next one will be Walmart WMT, which also reports on the this week on the February 19th. So we will have to watch the update on their Gemini powered AI checkout. So with a high PE of 45 times, right, even a slight beat and rise, right, might lead to the sell the news profit taking on Walmart. So this is something that we need to take note. So for the next one will be Occidental Petroleum (OXY). So this stock likely to trade on the energy sector rotation. So as the tech soften, right? So capital has been flowing into the SLE energy and then the XLI industrial S&P 500 sector. So this is one of the stock in the sector that worth looking at. So for this week, the headline will be the sell the news as well as the sector rotation out from tech. So a bit of the risk management framework. So these are the three things that we should always keep in mind. So trade levels are not the opinion, and we should define the invalidation before we entry, and then also reduce size during the consolidation. Do practice discipline and patience with. So this video is actually for educational content only and it's not financial advice. So the disclaimer, so the analysis and the result are actually presented does not recommend or suggest any investings in the state stock. So this is purely for analysis purposes.